Here we are. We're gathered here today, 8/3/2012, 5:53 a.m., called pre-market. Pre-market futures based on the NYSE, New York Stock Exchange. LinkedIn came in, beating down ELG, which we like. You're getting gaps on CF. CMG has a little gap finally, but it's a super gap that going right down the line. When we look at gap open up, based on the monthly jobs report, is that the program trades that happen on the NYSE, 50% of them are there. Now, we'll talk more about the night capital and the high frequency trading programs that we have on our website. The public has been bamboozled for a long time. They don't understand these things and these high computing frequency machines that are in the market these days. And then the tape, once the consumer that used to be involved in the markets understand how these programs work, it'll give you great confidence to be with SMF. Learn about that so that you can get your engagements. We're going to talk about the super gap up on the NYSE. On the gap open down list, there isn't too many. AT&T, that's earnings related. So there's a couple of earnings related type names that are gapping down. And once again, we haven't had a very decent number out of a pre-market monthly jobs report for quite a long time. So this is what they look like in pre-market futures when they do okay. And the list, the qualifier for the list is everything. It's going to be $1 or higher across the board. But once again, it's a broad-based pre-market gap open up futures. The stock market itself will open up at 9:30 a.m. Eastern Time and 6:30 a.m. Pacific Standard Time in 35 minutes from now. One of the key aspects or the key trade management and risk management is how stocks would travel higher on this artificial opening up bell. Pre-market, meaning that this is that when futures go higher, these go higher from the previous day's close, and it's artificial. It's not a buy and side sell market in pre-market. However, we will tell you that each one of the gaps that we teach people about gap trading, and we have events on that, is how to short that gap, let it come back to support, then go long at that support and see if they want to break higher highs. And using the pre-market gap open up price volatility on a major headline news such as a monthly jobs report is how do I square off in my intraday positions and what will be the strongest of the stocks on the NYSE at support. We trade a lot of these in here. We do know that some of them, LinkedIn, again, out of the social networking sites, they delivered a very good number that the street liked well enough because there hasn't been that much news out here in this earnings cycle that's been that great. So once again, how do I trade price volatility? How do I learn what the pre-market is telling us so that when we do get to the opening bell, which way will the support and resistances and indexes and sectors and everything that you need to know will be done in that first hourly opening bell. Once again, super gap up. It's nice to see some green for the bull. However, the bull has a lot of problem because the unemployment rate stayed at 8.3%. It was up higher. So I don't think that the number is a game changer by any means. This is just market, pre-market futures volatility, artificial prices that gap up. Then they come back down. So there are trade management techniques that we use in the SMF high frequency trading platform for long and short.